It's the beginning of another week here on Money Time at Money9. I'm your host Ajay, and if you're feeling an after effect from a late night Sunday knockdown, then our first news will have the same as well. Yes Bank today tumbled on the bourses after coming out with a not so impressive result and a recent AT1 bond ruling. Different brokerages have given different price targets for the private lender. Let's check out what are those price targets. ICICI Securities has given a hold rating to the counter with a target price of 19.3 rupees. Kotak Institutional Equities maintained its sell rating on Yes Bank with a revised target price of 17 rupees. Foreign brokerage firm Morgan Stanley has an underweight rating on the stock with a target price cut to 17.5 rupees. On Monday, the stock closed more than 8% lower than the opening price on the BSE. The stock closed at 18.15 rupees on the 30 constituent exchange. Alright, if you're looking to invest in municipal bonds or debt securities but still you're not yet clear with your concept on this investment instrument, then capital regulator Sebi has brought out a solution just for you. The market Watchdog has launched an information database on municipal bonds. The Sebi chairperson Minister Puri said investors can get wide range of information right from rules and regulations to guidance, note and frequently asked questions on the portal. Madhabi further said Sebi's latest move will help develop the bond markets. Municipal bonds have the potential to play a great role in the infrastructure development and nation building. The next news is for unit holders of the IDFC Mutual Fund. Now, IDFC Asset Management Company is all set to rebrand itself. Very soon, the fund house will be known as Bandhan Mutual Fund. If you're a unit holder of any of the schemes of the IDFC AMC, you need not worry. The fund managers of the IDFC AMC are not likely to be changed after the acquisition is complete. Bandhan Financial Holdings, the holdings company of Kolkata-based Bandhan Bank, will acquire IDFC AMC. A consortium led by Bandhan Financial Holdings will acquire the IDFC AMC. Unit holders of different schemes of IDFC AMC would continue to benefit from the same high-quality investment approach and focus that IDFC AMC is reputed for. The management team is unlikely to change. Unit holders need not worry. Moving on now, the inflow in gold ETFs has fallen by 10 times in the last 1 year. Gold ETFs saw an inflow of just 459 crore rupees in 2022. It was more than 4,800 crore rupees in the preceding year, though investors' account or portfolio numbers have increased in 2022 from the preceding year. Now, according to experts, inflow in gold ETFs have fallen continuously in the last 2 years. This is due to the rise in prices of the yellow metal, increase in interest rate and inflationary pressures. On the other hand, equities have attracted an inflow of 1.6 lakh crore rupees in 2022. Equity inflows increased last year as compared to that in the preceding year. Up next, Oil Minister Hardeep Puri has said that fuel prices should not come down until the OMCs compensate for the loss incurred on the freeze of petrol, diesel prices in the last 9 months. The three oil retailers have not increased fuel prices in the last 9 months. During this time period, international crude oil prices had climbed to 14-year high of nearly $140 per barrel. This hit the margin of OMCs because of the high input cost. But even then, the three oil retailers didn't hike prices to give relief to people in face of the unprecedented rise in prices of daily used items. As a result, the three OMCs kept on piling loss after loss. And today, even if international crude oil prices have fallen to $82 per barrel, the oil retailers continue to sell diesel in loss. So Puri hopes until and unless the retailers completely overcome the loss suffered, fuel prices may not fall. The three retailers we are talking about are Indian Oil, BPCL and HPCL. And now it's time for some auto update. Hero Motocorp has commenced deliveries of its electric scooter Vida 1 in Jaipur. Hero Motocorp had already begun deliveries in Bengaluru. Deliveries will soon commence in Delhi NCR as well. It already has pop-up stores in the region. The two-wheeler manufacturer had launched Vida V1 in October last year in two variants, Pro and Plus. And more from the auto industry, Honda has driven a new version of its Activa scooter at a starting ex-showroom price of 74,536 rupees. The new Activa will come in 3 rims. It will come with various new features like the smart key, which enables the customer to easily locate the vehicle. It will be fitted with stricter emission norms as it is required from April 1, 2023. All vehicles in the country must come equipped with newer and stricter emission norms. The all-new Honda Activa will come with self-diagnostic device to monitor real-time driving emission levels. The self-diagnostic device will constantly monitor key parts to keep a close watch on emissions. If the device finds out that the emission exceeds the parameters, then it will indicate through warning lights that the vehicle should be submitted for a service. And from two-wheelers, we move on to cars. Hyundai Motor India drives in an updated version of Aura at a starting ex-showroom price of 6.29 lakh rupees. The latest model will be an updated version of the compact sedan. The new Aura comes with petrol and CNG trims. There will be no diesel variants. The company said it is offering the car with over 30 safety features with 6 airbags option. And today was the last day to book cheap tickets in Air India's Republic Day sale. Flight tickets were available for as low as 1,705 rupees. Deep discount was available on travel across domestic network from February 1 to 30 September 2023. According to the Business Daily Mint, tickets on Goa to Mumbai route was available for as low as 2,830 rupees. While that from Goa to Delhi, tickets were available for as low as 5,656 rupees. And now we move on to stock markets. FPIs have been net sellers in India's equity markets so far in January 2022. They have sold shares around 15,000 crore rupees in January. Before this, they were net buyers of equities in the preceding 2 months. Now, according to experts, FIIs turned net sellers in January because of the attractive Chinese markets and concerns about the US economy entering a recession. The latest FPI sell-off was largely driven by the aggressive reopening of the Chinese markets post the lockdown. Now, according to experts, Chinese markets have become appealing. FPIs have shifted their focus from economies with relatively high valuations like India to China. FPIs have been big sellers in sectors like financials, IT and telecom so far in January. Overall, FPIs pulled out 1.21 lakh crore rupees from India's equity markets in 2022. The benchmark BSE Sensex rose by 319 points on Monday to close just below the 61,000 mark. The broader NSE Nifty closed above 18,110 points. Well, it's been one fast Monday and we have to bring this Money Time at Money9 to a close. This is me, Ajay, signing off. See you again tomorrow at the same time. Until then, take care and good night.